Hi, it's Jo
and Steve
from Freshagenda'a. This week we're talking about an updated Farmgate price outlook that we've put out this week. And we have had a bit of feedback from people on Twitter. Why do we do this outlook, Steve?
We do this, this is part of a large platform of work that we provide our clients, and we sell our analysis on the global market around the world to dairy companies, traders, exporters, ingredient buyers, etc. around the world, and some big food companies involved in that. Out of that we extract what it means for the local industry, and we make this part of it available to Australian dairy farmers, because we see quite a big gap in the forward outlook or the forward information that's available to the production sector in the Australian industry. We've got this lumpy annual milk price system where there's a season price, July to June.
Yep.
With very little forward expectation or very little forward signal, apart from, there's a full season price given. So we developed a platform that allows us to not only track where we think it's going beyond the current season, but also on a rolling basis, what's the value of milk at a point in time based on where the spot market is and what the forward pressures might be on the up or down might be on that number. So yeah, we're giving this away to farmers. We think it's an important gap in the industry, and so that's the main reason we've pushed it out.
Yeah, I think one of the things that we see is that there isn't a lot of forward-looking information out there anyway. And as you say, this is built up from our Global Dairy Directions product, which we sell to a lot of global dairy companies. Mm-hmm. That really talks about projected values of commodities based on the fundamentals of the market. And then what we do with this Farmgate price outlook exercise is really bring it back to a number that farmers in Australia can see, track and understand. So it brings it back to a Farmgate price through all the machinations of product mix and what that means back on farm. So I guess we're hoping that farmers see this as a valuable planning tool. It's not a prediction of a certain future, but it's something that they can track and look at over time. And I think it is important to make the point that it is based on some fairly robust analysis that we sell all around the world.
Yeah, and the outlook isn't a set and forget thing. It does change. So as information comes, and that can be about weather, it can be about currency, or policy,
yep.
And we got a number of those things in the mix right now. So it does change. So we don't say, right, next year is going to be, $5.60 or whatever, and that's it. It locks in. It does move because future expectations do shift around quite a bit. It is a globally traded commodity industry,
yes.
So we see a lot of dynamics, and we try to capture those in that platform. Yeah.
So I guess the last time we put out a Farmgate price outlook was June. We've put this current one out this month in October, because we've also done a fairly substantial update to our global market outlook. And for our many followers that watch this every week,
there must be tens.
There must be tens of them. Yeah. Hopefully this won't be too boring, but maybe we should just recap on what's changed globally that's really prompted this updated outlook.
So the other big thing in Europe right now is the uncertainty about the treatment of the skim milk powder mountain that they've cleverly built. Nearly 400,000 tonnes sitting in intervention stocks, means the government owns them. So there's a great deal of uncertainty about how that stockpile, will it come back to the market? Also whether they'll be in the market again buying excess product next year. We're projecting that Europe will produce more skim milk powder with this amount of milk than they'll need. So the Commission has recently made some statements saying they're trying to discourage the purchase of that. So that means it's going to stay on the market, there's going to be more oversupply, and that's going to flow through into Farmgate prices eventually.
So we're really heading into an oversupply situation, and when we have too much milk, we tend to see commodity prices being forced lower.
And Farmgate prices in this country.
Yeah, that's right. It's important to remember we are part of a global industry.
Yeah, look, despite the fact that most of our milk stays on shore, getting up towards or beyond 3/4 of our milk supply in volume will stay on shore. We are an open market to imports of cheese and butter, and that sets the market price in this local market. So, New Zealand's got cheese it wants to export, it puts it here first. We are their biggest cheese market, and so that reality strikes into our domestic cheese business.
Yeah, so perhaps we should talk a little bit about the import side of global dairy trade before we drop down into some of the detail around the Farmgate price outlook. Import demand hasn't been too bad, but it's highly concentrated in Asia at the moment, isn't it?
Yes, we've seen, while the market's been pretty balanced in this last, say, for most of 2017, we've seen it supply and demand in reasonable balance, and the expectations are there. We've got a couple of markets which are pretty ordinary. So the Middle East, North Africa region, South America's importing far less than they were. Russia's a bit smaller.
Yeah. Yep.
But as you add up, you correctly point out there, 85% I think of the milk equivalent of trade in this year so far is into China and Southeast Asia. So very strong dependence on those regions for growth to keep the market in balance. So simply supplies coming on stronger, those weak markets won't pick up quickly. We don't see that happening anytime soon. Even though prices are quite low for milk powders, it isn't going to fix the situation quickly.
No, that's right. So what we've got underlying this latest Farmgate price outlook, I guess, is some revised projected commodity values that are going to be lower going into 2018, just as that oversupply situation really manifests itself. And that's not going to come through in the current season. We're actually seeing the commodity milk value a little bit better than in June. But what's really come off in this year is that value capture above the commodity value for the current 2017-18 season, isn't it?
That's right. A very hotly contested cheese market. Some erosion of the wholesale values of cheese because of the strength of discounting of those commodity block cheese products, and the stubbornness of private label pricing. I guess that's what's held it down. So if you get one big retailer leading that out, the others will follow. Now we've got a discounter and one retailer matching and the other one following is pretty much what the situation is. So that tends to erode the value in the sector. And if you talk to major cheese players in this country, they'd say there's a lot of money drained out of the cheese market because of that pricing into those essentially commodity lines. It takes a while for that to come back. We do see that picking up after this year. There will be a bit more of a settling of that. But in this current year, you're right, we've seen the commodity value lift a bit more in the 17-18 year because the fat prices have stayed stronger than we expected. But we'll see that weaken into next. Yeah,
that's right. So what are the numbers we've put out there in terms of an average southern Farmgate price for 2017-18?
We're saying a midpoint of our range is $5.80 per kilo milk solids. Going into next season, we see that coming down. Our midpoint is $5.25. So we have a 20 cent up and down range on that because it's out there are a number of variables, and when you look at the way it can swing, and we're looking at that chart now, that you see the variability in prices, the variability in currency, it's quite easy to move around. So we put a range on that until we get closer to it.
And that's an important point to note, that things will move. We've still got almost 12 months until the opening prices for next year. But what this really allows us to do is monitor what the market's doing between now and then, and give a little bit of an indication of which way it may move. And as you say, when you look at this matrix, very small changes in commodity prices can have a very big impact on the final payout for farmers here in Australia.
Yeah, that's right. And look, it again, as we said before, it isn't a set and forget type exercise. As we get new information, as we get more indications of how that global balance will shift, and whether that erodes or not, weather's in play, currencies, etc., as I said before, we might change that outlook, but that's as we see it right now. Yeah.
So if anyone wants to get the full rundown on our latest Farmgate price outlook, they can visit the website freshagenda.com.au. Follow us on Twitter. We're at Freshagenda'a 2013. We put this out periodically as things change, so keep up to date. Happy to share this information, and we'll see you next time.
Okay, that's a wrap.